Hello, today is Friday. It is that of the 14th of September, 2012. And for today, we're going to take a look at 3 silver charts. We got the weekly on now. We'll also stick in the daily as well as the hourly. Take a look at 2 time frames for gold and a running average for silver at the very end. This won't be in this particular order. 2 time frames for the individual stock SVM, silver core metals. That was via demand. If you have a demand for anything you want me to put on here, let me know within the comments section below. And take a look back at 2010's quantitative easing, part 2. As part 3, of course, was announced yesterday. So we have this 33.42 Fibonacci level, which coincides with the 33.58. You can just say 33.5 is a huge level. And we have this trend line that was taken out. Obviously, this part of resistance hasn't been such, at least not much. However, the more often you test a significant area, the more likely it is that you take it out. We have test 1, test 2, test 3. So the last 2 tests had major pierces above it. So no surprise having a third one as well. Regarding this 18 average of close, on a breakout pattern, when you're in a downtrend like we occurred within this period in here, and you break out, you're looking for the clear breakout, which pretty much started around here, even up here, and then either A, come back to it and find support, or just lift off huge, and well, that is not coming back and finding support. It is that of lifting off huge. We'll see how the correction phase works and when it comes into play, because quite frankly, even though it's up a lot, I'm expecting today to have further gains. I stated this on in one of my videos comments last night around 7 or 8 p.m. Eastern time, and I also went into a Pal Talk room last night, the Bullion Bugs, and was talking about it as well. And well, here I am. It's not even quite 10 o'clock Eastern time. It hasn't happened, and it may not happen, but right now we have a follow-through of sideways action from yesterday's gain, and I don't think that's how it's going to end, although it could. Here's some example of follow-through right in here. It could do that, but I'm expecting it to go up. I said about 36.25 is a good level, and that from this point on would be about $1.75 or 5%, and given the silver volatility, I don't think that's really out of question too much. I can just draw this trend line, which is still intact. It's a aggressive uptrend line, but if I do the top end of it, it looks like there's still just a little bit more room to run as well. Let me just draw it in again. Yeah, not much room, but still it can obviously pierce above it too as well. Now, why 36.25? Again, Fridays I've seen these days so many times where you have the gains like this. You have the news of QE3 that came out yesterday from Ben Bernanke. So to me, logic and reason just tells the follow-through is going to continue on. Of course, there's no guarantee within that, but this is one of the strongest setups I've ever seen to predict in advance a decent size green candle for the period. All right, now the hourly chart, 60-minute candles. The Fibonacci's from this low because that's a huge breakout point. So that was Ben Bernanke opening his mouth. This is what happened. Okay, then from that point on, sideways action. Now what I like to see is the fake failed move before the actual move. Sort of like the failed breakdown below the support. Well, again, failed breakdown below the support. That would be something that I'd be seeing, okay, wait a second here. If we can have that clear break, really above 35, the highest 34.94, then this thing has some legs for some serious gains. And of course, a lot of that goes within that QE2. Okay, that switches off to gold, or switches towards gold. And we'll first move into the daily chart. So Fibonacci 1, no resistance, and a fairly fast move to number 2. Fibonacci 2, it stabilizes there for a few days, and boom, up she goes. Well, the price target's 17.91, which means it's pretty much there. Again, more room for the upside, which should justify the call of silver going to 36 and change, or just any type of update as well, as this does not look like it's topping out yet. If we look at this on the daily chart, that is the daily chart. Look at the weekly chart. There we go. If we look at this on the weekly chart, we are now on test number 3 of this significant Fibonacci level of 1758. It's above it at 1773. Just like silver, you have 2 pierces above it. Why would I be expecting anything else but it would be a surprise if it was perfect resistance. I would be expecting at least it to come up to 1800 or so, up towards this previous high. Now, what I'm looking for overall is for a confirmation break above this level, not just a break above it. Something where either A, it comes up fast to maybe the 1850s, 1860s level, or maybe it comes up to 1800, something comes back, does something like this, and then boom, that's the type of setup that I'm looking for. And when that's the case, I'm going to be extremely confident that the bull market's going to continue. And I'll probably end up doing that gold $5,000 an ounce coming soon part 2 video. So maybe doing that fairly soon. Okay, what's next? Let's go on to QE2. When QE2 took place, it took place on, the announcement was on November the 3rd, 2010. So that's how the chart looked on that day. And if you can't see how spectacular this chart looks on a bullish level, or how amazing this setup actually looks, well, then I don't know what to say. But here's the simple part. QE2 came into play or was announced after it was already in an uptrend. The breakout point was 1774. So that's a gain of about a little over 18 and 25. That's $7. And that would be, well, you need 180 for 10%, so well over 30% gain already at this point. Now, obviously, silver managed to make it up very close to that $50 mark. Thus, it continued on with a 100% gain from this point. Now, today, we're coming back from a bottom of 26, and we're currently got up to close to 35. So that's a gain of about 9, which is about 30%. And QE3, of course, was just announced. Now, after this occurred, if we take a look at this on what does December the 3rd look like, QE2 was announced right in here. Notice that fake move beforehand. I've seen this so many times in my life. You have this fake move, and then boom, this thing shoots right up to 29.33 from 25, which is a difference of another 4.5 or so, and a gain of about 15–16%. Then, of course, you have Fibonacci just working spectacular from that point on, where from this breakout low, you had support perfectly. More often you test it, the more likely you take it out. Then you come back, find perfect support in here. No resistance found here. Rather, you find double support. You find support again. And just like before, the last historical chart I showed, if you don't see the bullish pattern here for it going higher, I don't know what to say. But this one took a while before it came into play, though, because it really didn't start breaking out until January, and actually ended up coming back down to this 26 level in January of 2011. Okay, so that'll be it for silver. Let's finish this up within Silver Corp. And what we're going to take a look at is 2 time frames. This is the Toronto Index. If you have, are you looking for the American Index, which there is, they pretty much have the exact same chart setup. And within this time frame, it does have the same setup. We're going back to the lows of 2008. And we're going, and that's from the end of the year, like December. And that low is a $1.12, and the high of $15.35. Just saying that alone, you go from $1.12 to 15. Okay, so what's that in percentage gains, like 1,300%? A decent gain. You established, of course, this very reliable trend line, and when the trend line broke, it did manage to go back down to this level. So what does it mean when you have a decent break and then you retrace? Obviously, you got this trend line that it looks to me like it's still in play, barely. But when you get down to the 565 level, what does that tell you? Well, we were at the 38.2% retracement. which is often a time where it bounces from. It's still very close to that level as it's only up about, this was yesterday's close, so it's up only about 12% from that bottom. So it's a very good time, just simply by looking at the chart in here, to expect forward gains. If we look at this on the 40-day chart, this is pretty much the entire run of the chart. Then what we're seeing here is obviously the large gains from 7/10 of a penny, and you got the moves, the bull market from here to here, and you're establishing a pattern of higher highs and higher lows. So when you see that you got a 38.2% retracement from point A to point B, and you see you're in an uptrend on higher highs and higher lows, and silver looking very good at this point too, quite frankly, I think you would not be smart to sell at this point, and I would expect this to continue on with higher gains. And yes, finally, we're going to take a look at the running average for the silver price, as I did this last night. This is not a volume-weighted average price, and this is just quickly go over, but this is a running average from the 49.81 high. So if you buy an ounce of silver every day, this is what your average price would be. So this is now the second time since we had the breakdown that the average person is now going to be in a winning position since, of course, the 49.81 top. Overall, though, when you look at the setup on this, I like to talk about this like a chess game or a risk game, a game where one person has a turn, and the next team has a turn. Okay, turn A, going down. Then the other team goes. Then the other team goes, and next team, next team. You get the picture. So obviously, it's now the bull's turn that has been in play now from the 26 low. Overall, when you look at this type of chart, it's got to pull back at some point, but where's it going to pull back? Here, 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 here? I don't know. But it's going to correct at some point. What's important is not to make a higher high, although if it does, that's great. But what's important is to make a higher low, hopefully retracing only 38.2% from this low, but it can make 61.8. It's got to hold the 61.8% to keep the any reason for the bullish status coming soon, but it should hold 38.2. But any type of pullback, and then when you make a higher low, then it's extremely important to make a higher high above this, and then again this. And really a clear break and hold above this previous resistance should be enough to clarify that this thing is good to go. So if you just flop a line, say, well, at the 37.50. So any type of situation where it does something like that, when you have that clear break above, and I'm predicting it'll be 42, when confirmation will be set that the bull market is going to continue further, and we are good to go. So thank you for tuning in. I probably won't do another chart video today, but there might be a QE3 video, because what happened yesterday is I went to CNBC and I decided to get the article for the quantitative easing, and well, I quickly read that Ben Bernanke was aggressively doing this, and I went right to the comment section, and that's all I needed to do. And I'll share that maybe later tonight. Take care.